Well, how you got together a little presentation, a 10,000 foot view presentation. And so let's get into it. As you can see here, right? Home buyer programs. There's really 2,000 plus different programs uh, around the country. And, you know, piggybacking or lambacking off of Dr. Financial Literacy here, he's just back from Tokyo and Taiwan. Those of us here in the United States don't realize how blessed we are in that we have so many different options to be able to leverage and finance. That is not the case in other countries. Uh, Doc, if I'm correct on that point or in that vein, let us know if you don't mind in the comment section. But we have 30-year fixed interest rate loans that we can finance or leverage to buy real estate. And so if you're someone that wants to get onto the property ladder, okay, and has the ability to pay, you've just been waiting for a crash or, some of these things that you've heard online, well, then know and understand that you are in the best place on the planet to be able to leverage real estate. Okay. And you have to understand that should help you feel a little more confident as it pertains to what it is that you're trying to do. So let's move a little forward. So the first program that I want to speak about is the National Homebuyer Fund. Okay. And before I get into this, another little aside, when you're dealing with folks like myself, you have your traditional banks, your Wells Fargo's, your Bank of America's, your Chases, okay? They typically don't offer these types of programs, or the programs that they offer are wrapped in what we call a Community Reinvestment Act type wrapper, if you will. A lot of times those funds are earmarked for certain areas, certain MSAs, metropolitan statistical areas where the income and the racial lines are a little more diverse. And long and short, the reason they're doing that is because they probably got their hands slapped by the CFPB or somebody of that nature for doing something wrong, right? Predatory. So that's the big boys. Then you have folks like us, mortgage banks, where we specialize in doing mortgage loans on the pretty much the total spectrum. Okay. Some people might specialize in certain areas, but we can do it all. We can broker, and we also have everything in house where we can bank and make that process faster. And then you have your independent guys, the brokers, right? That have these programs as well. But for the most part, these programs are put together by certain groups of people, 2 to 3 of them, and then they're dispersed through all these different channels, right? So what the National Home Buyer Fund really offers is a nationwide down payment assistance, and it sits on the FHA loan platform. Okay, it's a FHA loan, and that 3.5%, either based upon the excuse me, the lesser of the appraised value or the purchase price, whichever is smaller, you would be able in this program, in this case, to get that 3.5% to help you get to 100% of the purchase price. So 96 and a half, okay, plus 3.5 equals 100. Now, you still have to deal with closing costs. I like to teach properly, and you do have closing costs that you have to deal with depending on where you are in these United States. Anywhere between, I'll say today, 3 conservatively. If you're over in Mississippi, um, who else? Louisiana, Mississippi, Louisiana doesn't have a lot of high property taxes. But now with the insurance kind of kicking in, it's a coin toss. Got to really look at it case by case. But depending on where you are, 3 and I'd say, to 10%, 3 to 10% in closing costs based upon your purchase price. And so these down payment assistance programs are just for that, to assist you. So for those of you that are looking to purchase, maybe you have the ability to service a mortgage payment, okay? But you are having problems coming up with both the down payment and closing costs. That's the spirit of these programs. So the Nationwide Fund, it's nationwide, 48 states. If you'd like to know which states are available or if this would fit for you, you could either speak to the lender of choice that you like to deal with, or leave us a comment in the comment section and let us know what state you're in, and we'll send you a DM on how we can find out if this program works for you. But it's a down payment assistance program, right? That does not have a first-time home buyer requirement, right? That's key. Now, whenever you hear no first-time home buyer requirement, more times than not, you're going to have a repayable flavor of a down payment assistance. Either it's a silent second that just sits there, and whenever you refinance or sell the home in the future, or once you get to 30 years and it's about to be paid off, it has to be paid back. Those funds will have to be paid back. This one in particular has a grant portion to it where it could be forgiven, but not the best pricing. Okay, the flavor of which this program really is used the most is for those that have a credit score, a middle credit score at 600 and above, and aren't first-time home buyers, or your area where you're located in the country doesn't offer a down payment assistance program. Okay, but again, you got to have some monies yourself, or you have to be working with a professional that can get some seller concessions for you. Let's see here. We got a couple of comments. So we got an amen, amen, and that amen from the church is from the statement that I made earlier, in that globally, the United States is the only one that has a 30-year fixed mortgages where you can leverage. Everywhere else, there's a different version, and it's nowhere near 30 years. And then he's also got a comment here saying, I was able to leverage 4 properties coming off food stamps, child supports, student loans, etc. Speak the truth. I use HUD assistance, 3% for my first home. Later purchased, let's go back. It says later purchased a foreclosed HUD home. Yeah, man. Yeah, Doc. HUD homes, or the HUD home store, and there's not a lot of foreclosures today. If you don't believe me, go to HUDhomestore.gov and search for all of these foreclosures that everybody's on YouTube is trying to tell you that they're out there, and it's slim pickings. But if you can find one and you meet the criteria, great source, right? And as you've attested to, you have been able to overcome a lot of the barriers that folks today don't even have, right? They're just listening to the wrong information, and it seems like the sky is falling. So I appreciate that. And then he has one, Doc has one other comment. What does it say here? Is there a charter limit for comments? Oh no. Why? If you comment all you want, is it limiting you, Doc? If it's limiting you, let me know. But no, there's no limit. Go ahead, man. Engage. I appreciate it. It helps those that may have questions or are a little timid to do so. So, anywho, 600 middle credit score is the minimum. All right, with the National Home Buyer Fund, 48 states, and it's going to give you the 3.5% based upon the lesser of the appraised value of the purchase price. Okay. And again, no first time home buyer requirement. Now, from there, I want to segue from there. Well, not necessarily segue. Let's go a little bit more. We're going to segue into the Texas, one of the best down payment assistance programs in Texas, and it's the Texas Department of Housing and Community Affairs. And the reason I'm bringing that one up is if you do not have access to a national DPA, or if you don't like that one, it doesn't fit, in my mind, your next step is looking at your state level down payment assistance. And you always want to deal with the housing finance corporations or associations. And again, you could go to gov.gov, HUD.gov, and search for a list of the housing finance associations for your state. And there you would find if there are any down payment assistance. So that's the next level, is the state level. And then from there, I would go local. But just to juxtapose the national down payment assistance program, where the minimum credit score is 600, with the TDHCA, the minimum credit score is a 620. Okay. And there's also going to be income limits based upon the type of loan that you're doing. Okay. If you're doing the bond back versions, right, where there are potential recap recapture parameters with a loan, um, or you're at the maximum of whatever the FHA loan limit is, or the conventional loan limit, and then you have on the conventional side where you might get more favorable pricing if you're at 80% or below of the area median income opposed to 80% above. So one other thing with the TDHCA program that they brought about this year, and I think it's a good thing, is there are going to be certain requirements. And this is something, if you're looking to buy a home, everybody's freaking out about affordability and am I going to be able to afford it? This is a great formula for you to use, right? And I'll see your comment, Doc. I'll get to it in a minute. But what TDHCA said this year is if you're not renting, if you're coming from a place where you were living rent free, okay, then you got to have a 3-month reserve, 3-month reserve requirement after closing. Okay. And then if your debt to income ratio, the back end portion is over 45%, right? Then if you have been renting, if you're over that 45%, then you cannot, your home loan or your monthly payment cannot exceed 150% or half over what you've been paying. Stated simply, if you've been paying $1,000 a month, your new house payment, principal, interest, taxes, and insurance can't exceed $1,500. And so there are some additional guidelines that one would have to meet once you get to the state and city level. But the programs are going to be that much more diverse and offer more benefits, in my opinion. The TDHCA also has one of the best kept secrets, and I think folks are finally starting to catch on, but most don't understand mortgage credit certificates and MCC. And if you really understand the power of a mortgage credit certificate and what your effective interest rate is, along with all the tax benefits that no one talks about or understands, you really understand that, even at a 7.25% rate today with TDHCA, them offering a 15% mortgage credit certificate, which is a dollar for dollar credit, you can actually use that to delete a tax bill if you had enough money from it. But that brings that 7.25% effectively down to about 6.25%. And again, not getting into APR and things of that nature, but these are things that your lender should understand and be able to explain to you so that you know which direction to go to. But overall, my point is this: there are programs available for you to overcome spending all your money to get into the home, because we don't want you to be house rich, cash poor. So back to the TDHCA, they've implemented that 3 months reserves, right? So if your house payment was $1,000 PITI, right, after closing, you would have to have $3,000 left over in a qualified account, something that you could liquidate for when life happens, because life will happen. So let's take a little break here. Doc has another question. He says, yes, I had to cut off from my previous comments and add it to another box. Wow. Yeah, I didn't know that was the case. I don't have anything in my settings with YouTube. I don't know if that's something on your end, so I'll have to check that out for future reference. Thanks for letting me know. So anywho, this is a first-time homebuyers program, okay, in that you cannot have had ownership interest in residential real estate in the most recent 3 years. Now, TDHCA also has a non first-time home buyer options, or a couple of them as well. And again, the rates are going to be a little higher, but the credit scores still are what they are. Okay. And again, I mentioned about the mortgage credit certificate. If you're a first-time home buyer, respectfully, and you're in an area that has a mortgage credit certificate, you need to get that thing. If you don't understand it, if your lender doesn't understand it, reach out to us. We don't have a problem explaining it to you because I want you to win. But mortgage credit certificates are powerful, especially if you're in an area where you can get a standalone mortgage credit certificate, even better. So you're going to have income limitations based upon what county and city you're buying in. Credit scores, like I said, 620 opens the door. Obviously, the higher, the better. When I say the higher, anything over 640, you should be good. And then you have to be a resident of Texas, obviously, to get this program. And some of the benefits, again, down payment assistance. There's closing costs. At this point in time, there's not a grant version with the TDHCA, but there's some low interest rate options for the my first home option with the TDHCA. If you qualify, you can get a first at 5.75%. So that's well below market. But you got to understand and make sure that it makes sense for you. Okay. So do we have another comment before we move on? It says, I've been paying 7% on 3 mortgages for the past 15 years. Please give me another at 7%. Doc, if you could expound on that, let me know if you don't mind. But a lot of younger folks don't realize that really that's not a high interest rate. Moreover, if you understand the tax benefits that you get still today, you can write off the taxes. And when I say write off the taxes, you can use the taxes that you pay with the interest on the 1098, the property taxes, okay, to lower your tax liability based upon the progressive taxing rates that we are, based upon what income level you're at. Okay, you can do that. And with the higher interest rates, people don't realize with this standard deduction thing that they put in a couple of years ago, it really knocks a lot of people out from itemizing. But with the higher rates and things of that nature, a lot of folks are able to get to that itemization. And again, if you're really about growing wealth, then after you secure your home and have that stability and that place for your children and all the reasons that you want a home that have nothing to do with investing for your primary residence, then that next step is creating a business or figuring out how to use one of those rooms in the home exclusively to increase your monies, right? That's what folks don't realize. So yeah, people don't understand that 7% is a blessing. So he says, amen to that. What I know now. Yeah. What I know now. And you know what, Doc? What happens is, and ladies and gentlemen, I get it. When you've only been around and you've only realized or seen interest rates at 2 or 3%, and you hear all these people saying the sky is falling, then I understand. But you really have to educate yourself a little bit more, or lean on folks that you know, like, and trust. And how do you do that? You watch videos like this. You watch people over a period of time, and then you choose somebody whose message resonates with you. Okay, and then once you make that choice, you got to trust that person. I call it putting a lid on it. Right? You're gonna listen, investigate. You got to do your due diligence, right? And then you make a decision on what's best for you and your family, right? So one more before we move on. Let's see here. Please use these programs daily. There are also a number of strategies to use to offset interest. There are, and we might get into that on another video, Doc, as far as that's concerned. But right now, just trying to help people understand the importance of getting on the property ladder and all of the different options and programs that are out here for you to overcome the down payment and closing costs, if and only if you have the ability to repay. Okay, if you have the ability to repay. So let's move forward and get into this last one. And this is TSHAC, Texas State Affordable Housing Corporation. Again, two of the most popular programs in the state of Texas, TDHCA and then TSHAC. TSHAC is a non-for-profit organization, been around forever, right? And they too offer first-time only versions of down payment assistance via the government platforms, FHA, VA, USDA, as well as conventional platforms, right? And then they offer some non-first time home buyer type requirements. And then the real difference, in my opinion, today at the recording of this video is TSHAC still has a true grant that's available. It's about 2%. And that might make sense for somebody because a lot of these other programs have some type of time continuum attached to them for forgiveness, 3 years, right? So if you could get a grant and you understand what's going on, again, they've discontinued their mortgage credit certificate at this point in time. Heard that it's coming back, at some time, but right now that's not the case. But the grant, if you could find a grant, gratis, free money, then you're not locked in. And the reason that's important is because now that FHA and VA and USDA, they all have baked in time frames that you have to keep the mortgage in a certain number of payments before you can refinance within that family, FHA streamline refinance or FHA refinance, USDA or VA IRRRL. You might not want to get a program that has a 3-year forgivable type situation. Once again, you got to deal with somebody that understands how to present the information to you so that you can make the best decision for you and your family. You know what? Before I go any further, let me do this. Let me do this. No, we'll do it here in a minute. So, anywho, we got another comment here. Let's see. Doc says also look at bonus depreciation on the IRS. Yeah, Doc, you talking to that investor bone. That's next level. Again, the purpose of this video really is talking to first-time home buyers, getting folks encouraged to get onto the property ladder, and sooner rather than later. But by all means, you and I are going to have to get on and talk about bonus depreciation and things of that nature, because that's more of an investor type strategy when you get to that standpoint, right? So anywho, back to the Texas Department, or TSHAC, Texas State Affordable Housing Corporation. Let's see here. Pretty much same thing, right? Same flavor. Again, the difference between the national TDHCA and TSHAC. TSHAC really has a grant. And then TSHAC does not also, at this point, they haven't put those extra parameters as far as reserve requirements. And then what is the proper term that I'm looking for? Housing ratio expense, maximum housing ratio expense. So they don't have that put in place where you can't exceed 150% of where you've been paying with rent. Again, that's something that you can put into place for yourself, because as a lender, I'm going to tell you what the maximum is that you could qualify for, but it's on you to know your numbers, right? You need to know that what's the net that you're living on, and if you can really afford some of these things, because taxes and insurance nowadays are on the up because of the appreciation and things of that nature. So let's see here. So eligibility requirements with all these programs. You're going to have income limits. Well, not with all of them, not with the national one, but with the state ones, local ones, you're more than likely going to have income limits, because the spirit of the program is to help folks that are underserved. They don't have those monies. They didn't have the opportunity to get onto the property ladder, right? There's going to be credit score requirements across the board. You may have, there's a program even out here that I won't mention, but it's at as low as 580 middle score, right? If you could qualify. The ones that I'm talking about today, the lowest middle score is 600. Then from there, 620. And then depending on what state you're in, you would have to be a resident of that state. I'm going to take a few seconds here. If you're someone that is in the process of going through the loan home process or the home loan process, and you want a second opinion, pull out your phone, hit that QR code, and follow the steps and get a second opinion. We got to get out of the mindset that I'm just going to one place. And when I say we, those that come from minority communities or communities that have not had the financial literacy, and you just go to one place, and you might find out afterwards that you missed out on something. So I encourage you to take advantage of the second opinion and or a loan scenario. Depending on where you are in these United States, let me know, right? If you don't want to let us know in the comment section, or if you don't want to DM us or send us a direct message, take out your phone, hit that QR code, and get on the list to get a actual loan scenario, aka a official approval, and let's see what your options are. Okay, let's see what your options are. So let's get back to the regularly scheduled programming. Hold on, Doc. You had something else? It said, I live with a roommate for $400 a month for 5 years, never increasing that rent to get on the property ladder. A change in mindset is also important to home ownership. Man, I'm gonna send you your check, man. They gonna think I planted you, but you are preaching to the choir. Mindset is everything, right? Mindset is everything. And then not only that mindset, I talked about it in a post that I put on TikTok the other day, being flexible. Okay. One things that's going on in this social media world is, you get FOMO, the fear of missing out. But trust me, I look at these bank accounts, I look at these financial documents, and you guys should read The Millionaire Next Door. Most of these folks are capping, as you guys would say, they fronting, and even some of those folks that have those things, they're leveraged to the hilt, and they can't sleep well at night. So don't base your life off of what you see on TV. Um, uh, and so, yeah, mindset is very important. Being flexible, taking on a roommate, right? If you're living at home, younger folks, don't misuse your opportunity and say, okay, I'm making this money, and because I don't have rent and stuff, I'm out here living my best life. You got to know and understand and take advantage of every opportunity that you can when you can. I know we don't hit them all out of the park, but yeah, mindset is important, and especially when it comes to your funds. Younger folks don't realize. When I was younger, I didn't even realize and like Doc said, if I knew then what I know now, I would have done a lot more. But you don't realize the power you have with the size of your dollars now. It's not important. Time and the compounding of what those dollars are doing if they're working in the right place. Let's see here. He said, "Yep, get that second opinion, amen." And then one other thing, Doc said, "Sorry, so excited about this talk." Oh man, you good, man. You good. You right lock step with me, man. So again, eligibility requirements. Make sure you understand the income requirements based upon whatever program you're looking at. If they're credit score requirements, and then residency requirements, where you're living, right? And so with all of these different down payment assistance programs today, there's all of the options that are available, right? Conventional mortgages, FHA loans, USDA, and VA, right? For your primary resident type transactions. And for that matter, single family residences, manufactured housing or mobile homes, condominiums, and then depending on what program you're looking at, for sure, duplexes. For those that have that, acumen that understand, hey, I'm going to get somebody to help me pay this leverage while building equity as I grow on that property ladder. So as I enter in my first foray, if I could get a duplex, wow, that's awesome, especially if you could finance it over 30 years, even at 7%. So there you have that. And so in conclusion, right, choosing the right home buying program depends on your individual circumstances. That's the flavor of life. We're all different, okay? Your circumstances are not mine, all right? So consider your income, your credit scores, and housing goals, your goals, not what you see on TV, goals, and seek guidance from either a housing counselor or the lender of choice, the one that you know, like, and trust, and explore your options and make informed decisions. It's about decisions, man. We need to stop letting our circumstances, because of bad decision making, uh, direct our paths. We need to take a step back now with all of this information that we have out here. And I know it could be a little confusing because that barrier is so low. Everybody could just show up and throw up. But put your spidey senses on. Use a little time. My wife says all the time will tell. So take your time, but don't take too long, man, because home prices, do your research, are not going down. And yeah, they drop these rates, it's going to be another scenario where the rich keep getting richer because there's just not enough inventory. For those that want a second opinion, take out your phone, pull out the QR code there, get on that list. If you want a loan scenario for your specific circumstances, do that. And as we get ready to get out of here, Doc says, I grew up in public housing in Savannah, Georgia. I wish I had information and knowledge that's now provided by you and others. Please keep up the great work. Glad I found your channel. Blessings, Doc. I appreciate you. Man, you know how it is, man. We come from a place where, if we knew better, we should do better. So same thing. I'm coming from a place where I didn't have a lot of information, and that's why I like to share and give to those that are out there. And so even if I'm not your guy, that's not what it's about. Listen what I'm saying, folks. Ownership matters, baby. Don't let them fool you. Don't let them hoodwink or bamboozle you. Who is they? They are the big conglomerate hedge funds, and there's only 3 or 4, or a lot of the mom and pops who own most of the residential real estate. But if you just pay attention, more and more people are realizing that the returns are going to be here in the residential real estate. They're going to grow with the rate of inflation. It's a hedge of protection because last time I checked, man, everybody wants some shelter. And so you're welcome to whoever, what is that? Kasha 89. You're welcome. You're very welcome. Blessings to you. And I think that's it, man. Appreciate you guys for stopping through and engaging. And as I said, if we could be of a resource, don't hesitate to reach out. Subscribe, like, or follow wherever you're at. I thank you in advance. And so my time is up, but I thank you for yours. As I always say, guys, let's be good to one another. Let grace abound. And until the next time, peace. Y'all be blessed.